Three things happened on Friday that do not belong on the same day.
Retail sales fell 0.6%, the sharpest monthly drop in over a year. Consumer sentiment fell to 51, and the Russell 2000 closed at an all-time high, while the 30-year Treasury yield went up.
A cracking consumer, a record in small caps, and a long bond that refused to rally on bad news.
So we went through the retail report line by line, because one of those numbers is not what it looks like.
The consumer's mood cracked on Friday. The consumer's spending did not. Those are two different surveys, and only one of them was bad.
Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research.
July retail sales, minus 0.6% on the month, against plus 0.1 expected.
Ex-autos, minus 0.3 against plus 0.2 expected. And June was revised up to plus 0.2.
Then the University of Michigan preliminary August sentiment, 51.0 against 54.5 expected, and 55.2 in July.
Current conditions, 51.8. Expectations, 50.6. Both down hard.
And the rate market moved with it. Odds of a September hike fell to roughly 25% from about 40% earlier in the week.
So the screen said the consumer stopped spending and the Fed stopped hiking.
That is the screen. Now the report.
Nonstore retailers, online, fell 2.2% on the month. That is the single biggest drag in the whole report.
And the same line is up 7.7% from a year ago.
Because Prime Day ran in June this year, it normally runs in July. Those sales did not vanish. They were booked 6 weeks early, and the seasonal adjustment does not know the promotion moved.
Strip the online line out, and the control group rose 0.4%. Physical stores were up.
Restaurants and bars up 0.5 on the month and 5% on the year. That is the first thing people cut, and they did not cut it.
Gasoline stations fell 0.9 because pump prices fell. That is a price, not a trip.
9 of 13 major categories were flat or higher, and the headline is still up 5% from a year ago.
Our read. The mood cracked. The spending did not.
One number on Friday has no calendar behind it.
One-year inflation expectations rose to 4.3% from 4.2%.
In the same survey where sentiment hit a one-year low.
Households feeling worse normally expect prices to rise more slowly. Not this month. They feel worse, and they expect inflation to run faster.
Which is why 25% is not zero. That combination is exactly what stops a central bank from being able to help.
2-year, 4.15 to 4.17, up 2 basis points.
10-year, 4.63 to 4.68, up 5.
30-year, 5.21 to 5.25, up 4.
Weaker data, fewer expected hikes, and the long end sold off into it.
The gap between the 2-year and the 30-year has widened 3 sessions running, 104, 106, 108 basis points.
Part of that is the bond market not buying the headline either. Read the report the way we just did, and there is nothing in it worth rallying on.
But the steepening started before Friday. The same thing happened on Tuesday, on a day with no data at all.
So Friday did not create this. It removed the alibi. Nobody can call the last 3 sessions a growth story now.
Russell 2000, 3,068.42, up 0.51%, an all-time high and a 4th straight-up day.
S&P 500, 7,785.76, down 0.17, but up about 0.4 on the week. 3rd straight weekly gain.
NASDAQ Composite 26,729, down 0.28. Dow 53,732, down 0.20. VIX 1425, down 2.6%.
A record in small caps on the day of the worst consumer print in a year.
Small caps are domestic, and they are the most rate-sensitive thing on the tape. Lower hike odds, plus a consumer still spending in physical stores, is their setup exactly.
They were not ignoring the data. They were reading the half of it that pays them.
SanDisk up 7.39% to 1,641.11, up 22.1% in 2 sessions.
Seagate up 5.7. Micron up 2.3.
And 2 confirmations from outside the tape. South Korea's July semiconductor exports, $41.01 billion, up 179% from a year ago. Second straight month above $40 billion.
Total Korean exports, $98.89 billion, the second largest month in the country's history.
Taiwan Semiconductors July revenue, 467.58 billion Taiwan dollars, about 14.5 billion US, up 44.7%, a record.
AI is now 66% of their revenue, and capital spending is guided up to $64 billion. The detail behind SanDisk is the part most of the coverage skipped.
8 data center and edge customers, $93.9 billion of minimum contracted revenue at floor prices, averaging more than 4 years.
That covers more than half of fiscal 2027 bit shipments and about 2/3 of fiscal 2028, backed by $16.5 billion of financial guarantees.
Now the number that reframes all of it. Their current non-GAAP gross margin is 84.6%, with guidance of 83 to 85.
So the 80% long-term target everyone quoted as ambitious is a step down from where the business already is.
They did not promise unprecedented margins. They sold their ceiling to buy a floor.
Whether that was a good trade depends entirely on whether NAND prices were near a peak or near a beginning. Nobody has that answer yet.
One thing to add, because a 22% move in 2 sessions makes memory look like the cleanest trend on the tape.
It is the most violent one.
SanDisk peaked at 2,335 on June 25th. It bottomed at 1,015.89 on July 29th, down 56% in 5 weeks.
At 1641, it is up 62% off that low and still 30% below June.
Micron and Seagate bottomed on the same day, July 29th, all 3 of them.
The semiconductor ETF peaked June 22nd and sits 12% below it. Applied Materials peaked June 30th and sits 30% below.
So the Russell made an all-time high on Friday, while the entire AI hardware complex is still 11 to 30% under its June peak.
That is not a breakout. It is a repair.
And it changes how that contract reads. A company signs away its ceiling for 4 years right after watching its own stock halve.
Applied Materials fell 5.12% to 507.18 on a beat and a raise.
It held the after-hours drop all session, but not in a straight line. It opened at 498.44, ran to 523, and gave every point of it back.
Buyers turned up. They could not hold it.
And it is still up 89% this year and 30% below its June peak. The whole complex in one stock. Thursday, software rallied 3.10% on the Workday report. Friday, it gave most of it back. Software ETF down 2.07%, Salesforce down 256, ServiceNow down 255, Oracle down 3.65.
So we measured both days against 30-session median volume, because the question is whether the reversal was buyers leaving or sellers taking profits.
Thursday, the software ETF traded 205% of its median. Friday, 73%.
Salesforce, 123% Thursday, 68 on Friday. ServiceNow, 114, then 72.
And as a control, the S&P itself, 81% Thursday, 68 Friday. Friday was quiet everywhere.
But software was quieter than the market, right after being twice as busy as itself.
The rally was a crowd. The reversal was an absence.
Which reads as profit-taking. Nobody dumped software on Friday. They just stopped buying it.
And that fits because Workday is only about 1.21% of that ETF. Thursday's 3.10% was sympathy, not arithmetic. Sympathy is what reverses when the follow-through never shows up.
Japan escalated, and this time, it is not an anonymous report.
Reuters says the Bank of Japan is eyeing a September hike and a faster pace of tightening. At least 3 board members now favor moving beyond the roughly twice-a-year cadence.
A move from 1% to 1.25 in September is in play. The U.S. Treasury has urged swift action. Short-dated Japanese government bond yields set records.
And the yen did nothing. Dollar-yen around 159.33, down 0.11%.
A central bank turning openly hawkish, a currency that will not strengthen, and record domestic yields.
I'll read. That is not a story about tighter money. It is a story about a government that has to keep borrowing regardless.
Gold agreed. Gold miners up 1.93%. Gold up 63 hundredths. Kinross up 1.71. IM Gold up 3.10.
3 contradictions on Friday, and one thing underneath all of them.
Small caps hit a record because the consumer they live on is still spending. The long bonds sold off because its problem was never growth. And memory ripped because the demand is real, even though the chart is still repairing June.
The headline number was the least informative thing published on Friday.
Home Depot reports Monday the 18th, Walmart on Thursday the 20th. Both walked straight into a -0.6 retail sales print and 51.0 sentiment.
If the calendar explanation is right, those two should not confirm the panic.
Nvidia's results and the July PCE inflation report both land on Wednesday the 26th.
And the Bank of Japan decides on September 17th and 18th. That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.